I want to start with the euro dollar today on an hourly chart instead of like the longer time frames that we usually look at, because I think it's so fascinating when you're looking at the euro over the last couple of days with all of the economic headlines that we've had going on there as far as Spain goes in terms of the Spanish budget process and the Spanish bailout and the incredible stress in the sovereign debt markets that are starting to reappear again. One of the key things that I think is fascinating when you're looking at the euro on a technical basis is how this 28.35 level has held for the last 2 days, basically somewhere around here if you want to look at it. We tipped it a little bit yesterday, and notice how we tipped it a little bit on Thursday, and notice how again we came back to test it on Friday, but we're able to bounce off of it. And I still continue to believe that this is one of the more critical areas of support. If you peel back even towards the 3 or 4 days backwards, you see how this area just seems to be a very, very key level of support. I think end of the month there must have been a tremendous amount of optionality around the 28 level. The market just didn't want to bring it down to 28 level, and as you can see, we've just been bouncing around, just chopping ourselves to death here between 29.50 and 28.50 as sort of the range over the last 3 or 4 days as the week progressed. But over a longer term time frame, what you're seeing just on the hourly chart is a sequence of lower highs continuously, and it doesn't bode well. Basically, in my opinion, as I wrote on Friday in my Twitter feed, the 28.35 level goes, it really opens the way towards 2800 and towards a more serious correction. Let's take a look at the daily charts here. Let's go back, let's say 6 months, and we'll see how on the daily charts you see this. This is a pretty ugly daily reversal candle here. We tested at 25.50 and it just came right back down. Break here really doesn't offer us any support until around the 27 level. So I think from a technical point of view, clearly the path of least resistance right now is to the downside. If we can hold these lows over here, that's actually quite bullish. And we could begin the re-rally and perhaps a retest of the 3100 as a possible double top here. But a break here really does open up a way towards a more sustained downward path towards the 127. So that's how the euro shapes up going forward into this week. Obviously, tremendous amount of echo data on the calendar, so there should be a lot more volatility. But if we can resolve it to the downside on a technical basis, this is a pretty significant break to the downside that should give us further movement to the downside as we go. Dollar yen, on the other hand, those of you who followed me on Twitter again, really interesting change of pace in dollar yen here. Now, dollar yen has been just a one-way drip to the downside ever since it went up to 79. We basically did a resistance here around 79, as you can see, for the last several times on a daily basis. But as we came into the 77.50 level, this was a very important level. Remember, if we peel out the longer time frame, you can see this is a pretty significant support level. This at 77.50, and you see, of course, I think the Japanese authorities very much trying to jawbone the yen higher, or dollar yen higher, yen weaker, as it comes into a very critical support level. Let's just go back. I'm just curious. Even if I were to go back, let's say on a daily towards a year basis, I think you can see that on a year basis, this was sort of the very severe move to the downside, testing the 76 level. We came back up very heavily here, and now this level here is very big support. Now we break the 7700. That's obviously opens up a way all the way down to 76. That's very bearish for the pair. But what you're seeing right now, if I were to just zoom in on the latest price action, is a pretty serious hold. And I think if the lows of this candle hold, let's go back and just take a look at the time scale here. Display the lows of this candle were around 77.42, so 77.50. Just call them somewhere around here. As long as we hold the lows of the candle here, the path of movement here looks to be up, and we really have all the way up to 79 as far as the upside goes in terms of dollar yen rebuilding to the upside. So technically, RSI turning up, looks like we perhaps made a double bottom here. Certainly, support here is at 77.50, and as long as it stays above there, that technically looks like it's a turn in dollar yen. Pound, also interesting move here. We've been really distributing. If you look at the price action, it's really been distributing between 63 and 62 level here over the last week and a half basically. And Friday's move was kind of negative. This candle looks really ugly on a daily basis. If we get a little more granular and start taking a look at the hourly charts, you can see that that we really fell off a cliff at the start of the European session and really hadn't been able to come back up much. It is consolidating a little bit here, but really unless and until it sort of comes back up towards this 62.60 level and breaks above it, I think it looks like the turn here is to the downside. If you're looking at the hourlies on a more granular basis, you can see again a sequence of lower highs, which suggests that we probably continue to and lower lows again over here, lower lows, which suggests that we probably have more momentum to the downside in the pound. Let's go back to the dailies and just take a look at the dailies a little bit more in detail here. So the support is pretty significant at 61. This is really the big support here. A break of 61 just opens up a floodgate all the way down, really to like a 59 level on the dailies. So that's why I think it's so important watching these levels here. This is why this week I think is a make or break week as far as support levels in techs. You have this 28.35 level in Europe. You have the 61 level in the pound. Both of them breaking to the downside would really suggest a further move to the downside in risk as we go forward. So I think that's kind of how the week shapes up for the three majors. I want to complete my report this week because now that we get a chance to do a video, we get a chance to do a little bit more ideas with a little bit of bonus explanation of my money in motion trade that I talked about a couple of weeks ago on TV. The short in the Aussie Kiwi to the downside, starting at 25.75. If you notice that I suggested that I really like this to the downside for a whole bunch of fundamental reasons, but I said I didn't want to enter the trade until it broke the lows here at 25.75, which it did a couple of days ago. It triggered the trade here at 25.75, and the first target in this trade is around 2,500. My original move here was to see if we could, make the first short target around 2,500, which we're very close to making, and then just move the stop to break even and see if this thing could be milked all the way down to perhaps even 120, as this has made a massive distribution. Basically, this looks like a major double top with, you could even, it's not a classic head and shoulders, but it's a major double top with support really at this level, 2,600 support really being broken. If we can break down below 2,500, I really like this to the downside as it accelerates, because I like the Kiwi against the Aussie on this whole notion that soft commodity is going to do much better than hard commodities and it's going to outperform. So the trade is triggered. The trade looks like it's going in our direction, and I think this is the key to follow it on the MIM basis. Anyways, I hope you guys like the new video format. Email me if you like it. Email me if you have any other ideas of how you want us to do it. I'm wishing you guys the best of luck and the best of trading. Next week, follow us at FX Flow on Twitter.